All right, so I recently started a covered call position. There's a few reasons why. I've seen it to be more reasonable to do it now than, whatever, last week, than at other times. It's because, given the information, if we go here, like this is the VIX 1D, right? It's pretty good when it comes to volatility, the volatility index. Then you got the Russell, right? You could probably like draw a line there and there. It's got this increase in short-term volume on the shorts. Also, I did a little bit of an experiment here, right? It's been green this whole time. It's been increasing. The short volume has been increasing this whole time. And you can see it's crossed this line, started becoming an uptrend on this indicator right here, halfway through there. Right, you could actually call that a breakout in volatility if you were to do this here, right? And then do this here with that. So it's actually a breakout in volatility, right? With the Russell 2000. But here's another experiment. See all those going up. The distance between here to here, it's a measured distance at a sloping angle, right? Um, is comparable to what other time frame? Let's see. I don't see anything until we get to this point. And that one actually had a pullback here. So, oh, I also had one there. So I would say probably within this time frame, right? And probably within something like this, maybe. Um, See if I can find a really good one. Where it pretty much just stays green without turning red. This one almost does it. This one, I mean, it did pretty much what this one did. It dipped down because what it looks like, right? It says short volume increase without no pullbacks. That's what this looks like. It might be a little, this indicator is a little choppy here with this. Could be what this looks like on an oscillator, right? So that equals this, and then this, right? The breakout equals this. This one did not signal it. This one could have also, with the top and the bottom breakout here. It's right on point here, there. So, yeah, that's what that looks like. But this indicator is showing a straight strength to the upside, right? Um, Last time something like that more or less happened, you could say this was like one of those times. It's probably, was that December the 2021, right? So we go here, December 2021. Both on the day. This one should be on the week. And see what this one looks like. So I get these indicators to reset because when they first load, they're a little wonky. Okay, so 2001 December 2001 right here. November, December. There you go. So I guess this area right here is what it looks like. Right, right here starts off in the 16th and then it ends in January. So the 16th, right here, right there, starts off right here and then it ends right here. And then that happens. All right. Let's see. The other time was right here. No, I just messed it up. Dang it. Okay, delete that now. All right, let's use this measuring tool. Yeah, it's not really that much on point. This one looks a little bit better. Could have said that one. This one looks a little bit better. So we'll say the bottom of that is going to be the 2019, September, end of September to November 2019. Let's go 2019, 2020. And here, what was it again? Well, you could say September, more like October to November. October to November, right there. Then it went sideways. So nothing big there. All right. Got the Dow. It's rising. Got the triple Qs. It's kind of going sideways here with a little bit of a rising slope to it. SPY. I added this downward trend. Figured it was more valid than this one, but it's been from a long period, standing from about right here to there. Not really. I would call that flat, but it's also have the same, you know, parabolic short volume increase. And then the last time it's had it was right here, which was August 2022 to September 2022. August 2022, September, August. So pretty much right here. I want to say on the top, right here. Should be coming into this minor trough on the daily. The algos suggesting sideways and then a pullback into October. And then psychoanalysis is also asking, saying the same thing. So the peak would be towards the end of November, the 27th. So sometime at the end of next week. That's what it's suggesting, anyways. And we wanted to see October, right? Short volume for the SPY, and that was over here. At the bottom of it was August the 10th. So August the 10th, there's August the 8th. Yeah, pretty much right here. And then the bottom of that was like October, like the beginning of October, right? That was the bottom. So here to there. Let's say in September. I got that one? August. So September. Then October, beginning of October, right here. It's that pattern you always see a lot, right? It's like almost a head and shoulders type of pattern. It's like stocks love doing this pattern. I noticed this, right? They love doing. Let's see if I get a blank sheet. It's something like this, right? They love doing this. Oops. Probably not even halfway, really. Then coming up somewhat, right? And then doing that, and then maybe up again a little bit, and then ultimately going right back down past that point. That's like, we can make it more parabolic like that. They love this action. We'll probably make this one more parabolic too. Like that. You know what? We could just delete this one though. And we'll delete this one too. It's more like this. You know, pull that one up. That one up. Like that's the pattern they love. They love to do that with parabolic stocks. They love this pattern, and you could almost say it's kind of like this head and shoulders, a little bitty dip, and then up and down again, and then right there is a shoulder, head, and then it breaks, and then it just tumbles down till it finds the bottom. So yeah, it's like this thing right here. There it is perfectly. Look at that. Hold on here. That's the pattern that I'm talking about. Oh man, I can't get it over there. All right. Well, it's pretty much right here. This, this, that, and then flush. That. This right here. This is the same thing. Right? They love this pattern. Sometimes you'll get this one on there, right? But I've noticed that. And then or you could have that one that kind of chops and then breaks down. Right? They have the reverse version of it, which is kind of like this one right here going up. Then they got this one going down. But this pattern right here, right? And then the head and shoulders one is, you can see it right here too, right? Here it is again. This, but this one's a little bit more dynamic because it sets in a V bottom. There, and then there. Right? That's the same thing as this and this, except this one had a V bottom to it, and that's another one that is you'll always see that, in the shorter time frames and the longer time frames. Double bottom, um, kind of like this and this, right? V bottom, V top, head and shoulders. This double top pattern, I guess you could call it, right? It's loved. Triple tops, I don't see them that much. I do see more of the double tops than I do the triple tops, but it's something like one, two, three, let that drop. One, two, three, let that drop. Anyway, then this one was Clover itself. And then it broke. It's going down. In my opinion, this is more of a consolidation zone for short interest because I believe their average is at $2.50, more or less. I think we're going to have a move up that breaks and gets into this area, which will turn this trend into this, which this one's already showing it. But then that was the break of the trend right there. And then this should roll into it or roll over it. This moving average. And the reason why I think that, right, is because over here, you see that pattern building. You could either say that's a head and shoulders pattern, or you could say that's a double top pattern here and here. So basically, right, you got that parabolic move, right? Then you got that move down. Damn it. This thing, I don't know, it's been trying to do on it, calculate everything on its own. And then you got the move up. Now I'm expecting the next resistance is around $2. The next support is around $2 within this time frame here somewhere. So expecting something similar to this. And on cycle analysis, this is what you would call this is the end of the trough, right? So that's when it's made its trough from, and you could say this area right here, right? This block order right here at around $1.20. It's made its trough up, and it ended its trough right around this low point right here, which is $2.50. And when you get a cycle starting, right, and the high point of the cycle is towards the beginning, typically the low, well, it's going to be left-hand translation. The low point is going to be at the end. So you have a positive cycle and a negative cycle. This is a structure. This is a positive structure. The cycle starts at the low point and works its way to the high point, and then ends higher highs, right? Higher lows. Now the next cycle begins, and when it begins, it starts, and then if it fails, breaks this trend, all these indicators start rolling over. It breaks this key support, should probably be somewhere in the $2.50 range. It breaks that, then $2 is on the table. If it breaks that 250, starts heading down, breaks this trend, I would think $2.50 is on the table for or $2, excuse me, $2 or even lower because my support is at 184, and then there's a deeper support at one above 150. We'll say 170. The lowest you could say 165, but I would say 170 to 190 should be an area of interest where this confliction was at. If the short sellers win here, then the next one will definitely be somewhere in the dollar range. So they cannot win this consolidation zone right here. If they do, then just keep your covered calls rolling. I hope you set them out for a long period of time because this is towards the end of the year. I got mine rolled out until the positive area that I was looking for. I was thinking this structure right here on the 3-day chart was going to be a positive structure. And the end of the trough is here. And then this is when the period of risk exists. So, well, future looking, anyways. This is like way in the future. You're talking about April to July. So, anywhere between April to July, this is what I think the risk is at. But I could be wrong. That could change. But anyways, that's where I have my covered calls expiring at around this time right here. So I got all this time from here to about right there to see the fluctuations happen. And you can see it right here too, right? You can see how this this pullback or retracement was really deep, and the high it's not priced, so this price could be higher than this price, but it maintains the positive structure. So it's losing higher highs, right? Or it's losing the positive area. Right here, it dipped below the lower low that it had before it started really ramping up, right? So this was its low, and this one dipped down into it. So that's a negative signal. I wouldn't be surprised if this rolls over and we start seeing something like this play out. It could be a little bit different. Could be more like exactly $2. But something like this. This is what I'm expecting. And then on the weekly cycle, see we're at the peak, right? Of the trough. We already this is where the weekly trough started at here. It was a dominant cycle because it's a longer term frame time frame, right? So this is the dominant versus this one right here. And it's peaked out pretty much. It will start down sloping. It looks like around October, the middle of October, it's when it's really starting to come on down. We should see the end of the trough, though, no later than the end of November. That trough will come to a conclusion. Um, yeah, the structure is fading. It looks like the shorts are fading this uptrend. That's what it looks like. I mean, there was a whale pump on the 3-day here, But I wouldn't be surprised next week if it shows these red bars colliding down, sloping down. It will really be in trouble if the whale pump lights up. I mean, the whale dump lights up right here. Then I'm also watching, the short interest. I have it on this chart too. You can see how it's sloped up here. On the 3 day, it's more visible. How here, here, there, and then it broke it here. So pretty much like when this went positive, it turned positive on its peak. That's interesting. How about this one? No, it was negative. See, that's the difference between this one and this one. On this one, you had positive, you had a negative, you had higher lows turning positive, you had a green right here on the peak of the short interest, and this ribbon right here pointing up, higher lows, it's positive. That's the difference between this one and this one here. This one here you had negative, right? You had a whale dumps, not whale pumps. This one here you got whale pumps coming up next, right? Then it went negative. So short interest going into a negative scenario, right? With this oscillator coming down, right? This negative cash flow. Everything was negative while it was going higher and higher and higher and higher. Versus this one, while it was going higher and higher and higher and higher, you were seeing positive scenarios play out. Green showing up on the board. That was recipe. It's on the upside, not the downside of this. Right? If we move this out of the way. Whoops. Move that out of the way. See, it's positive here. It's negative here. It's negative while short interest was increasing. So if this rolls over, this histogram starts building more negatively, and this continues to point down, this fades, structure turns over, starts turning into more of a grayish tone, and then this oscillator rolls into the negative, as well as this becomes negative. That's probably going to still be positive, and it breaks the trend, then you're guaranteed for something like this to transpire rather than something like this to transpire. As well as on the cycle analysis for the dominant cycle on the weekly versus the daily, which you can see in the little dash marks on the cycle, that it's hitting its peak here. And in order to have a trough end at a higher note, it needs to break out. If it fades and breaks this trend, then $2 is on the table for the end of the trough. On the daily trough and the weekly trough, they both line up simultaneously on this one. See, this was this one. So the middle of that one, right here. So in the middle. This one and this one line up. That's the significant trough. This will establish a bottom, in my opinion, short-term bottom on a longer-term time frame. You're looking out for years. I believe this will establish a bottom. There will be an order block order filled, I believe, somewhere probably where this consolidation zone is at, around the 180. The 170, give or take 10 cents. How about that? That's what I believe. We'll see what happens. Anything else? I mean, I've just been sitting here at the front of the computer all day long trying to figure out some things. See if I can see anything differently, look at it through a different lens, right? It's on an upward trend. This is my trend line. Delete that. Before I had the indicator that showed. The last video that I made, I had something. I had some information about this. You can watch that one if you want to. But if you go to the 1D, it's supposed to be more on point than the other ones. You know, you can watch. I would say the 2 hours probably the best one if you're on the daily chart to consider. Watching. I think the 1 hour, anything below 2 hour, is all like more like intraday trading. 2 hour and above, I believe that's more like swing trading and above. So it's negative. It did bounce um, recently, so it's still holding this trend here, but the indicator suggests this is its trend right here. So I drew this one in. But it bouncing right there makes me think the indicator one might be needed to be tuned up. But we'll see. Um, yeah, it's at an upward slope. All right. Now we need to find the downward slope. I would think it would be. So this is more like a topping. It needs to break that. So I'll draw. It's more like a horizontal line actually. Right here. Yeah, probably that right there. Oops, what happened to it? Let's turn it white. Okay, there it goes. Right here, it needs to where it bounces and reverses. It has to break that. If it breaks that, then it's more considered to be in an uptrend, in my opinion. So that's the 2 hour. Let's make sure it only stays on the 2 hour too. No, no, you know what? We'll keep it. See what it looks like on the daily. There it goes. So it needs to break out of this to be really on fire. We'll save all that. I did have some interesting stuff on the day trading one of my simulator template um, when it comes to Clover. What was it? Well, right here you have this. Right. Let's see. I guess it's not going to show it. There it goes. Bearish engulfing pattern. On top of a downtrend. This says 2 bar pattern. So you have the bearish engulfing pattern. It was still went a little bit higher after that. Then it rolled over. This indicator rolled over first. It was been rolled over. Oh yeah, right here. You can see the selling over and over and over again. Again, these represent the selling and buying pressure within the candlesticks, right? So there's way more dominant selling in these candlesticks than there are buying. So that was something. And this one also, it's still positive on the 3 day, but the indicators are pointing down in a negative. And the 3 day, for the past 3 days, it's saying, I don't know if it includes Monday as being the last day or Tuesday, and then Friday was the first day of the 3 days. But 16 to 19 starts on the 19th. I'm guessing that's what it means. Starts on the 19th, starts on the 16th, so 16, 17, 18. So that'd be 16, 17, and 18. This one's going to be 19, 20, and then not the weekend, but 23. So Monday at the close of the candle, this will be recalibrated for the 3 day period. And we'll see if we get a rollover. That's what I'm expecting. This indicator, we got all these, right? If you look at this one here, you got 5 minute, 10 minute, 15, 30 minute, 1 hour, 2 hour, 4 hour, 1 day, one, so on. And they're all rolled over negative. That's 240 minutes. I guess that's going to be the 4 hour one, then the 1 day. And then over here, I got the EMA, right? The exponential moving average for the 3 day and the 8 day cross. Right? 3 days ago, it crossed on all the lower time frames, all the intraday time frames, and the lowest swing trader one that I like to pay attention to, which is the 2 hour one, um, to the downside. So everything's negative, right? Negative here. The day says it's negative. The week says it's negative. So that's even worse, right? So it's printing red everywhere. This would be like a sentiment, right? Technical sentiment here and here on a moving average scale. Um, yeah, but it's still holding the trend. If you look at the algos, they are below what you be considered this green line right here, which is considered to be the average. Above is positive, below is negative, and they are currently below here, which is the negative structure. That's where also my conviction comes into that that play where I said where it goes up, then it forms a double top, and it doesn't reach too high, then it rolls over and comes down. So that's another area of conviction on that. You can see it right here too. It goes up, down, up. Now it's going to roll over. It's they're all pointing down. They're losing strength. So they're more. It's like how this one's is rolling over. It's becoming more biased to the downside than it is to the upside. It lost. You see this green bar right here on top. That was like a confidence also. Confidence to the upside, which kind of follows. It tracks this bullish. See how this is all orange, right? You see it red splotches, but for the most part, it's just pretty much all orange. It's like this right here more in detail than this one right here. And it came to an end there. So it said, that's it. And it never got it back. Even with this little move we had, it never printed any confidence. It just continued to have this semi-negative confidence to it. This one is showing still a little bit on the positive side. You did have the money cash flow roll over into a negative territory. See here, there it goes, rolled over to negative. So if this bounce, it's a dead cat bounce and it breaks, then it will never go into positive. It will continue rolling into negative and build from there. And then that would affect the 3 day, causing it probably the overflow to dissipate and it to slowly roll over. But longer time frames take longer to move, right? So what else is there? There's the cycles, volatilities, all the shorts, right? Clover right there, right? Cycle analysis on the S&P 500. Um, I'm expecting it to go sideways and then into this minor trough on the daily. I'm expecting a short-term bottom on a trough, and then potentially go back up to retest that level, that high level there, and then come right back down again into the end of this trough, which almost syncs up with this one. So that's going to be a significant one. This November trough on the S&P 500 or the SPX, the weekly and the daily, they both sync in together right here. That rarely happens. So like this one doesn't. That one does. So that means the minor trough and within the daily sync up to the minor trough within the weekly sync up simultaneously in November, middle of November. So that'll be a significant end of trough zone. High period of risk could come down to this trend line, which was at this block order, which is retesting this low for 5,153. Potentially looks that way. We would have to see these indicators start rolling. We'd have to see it start suggesting it more. There's short interest over here. I believe it if it holds above this. This is what I call the mean line, the mean for the not too much or too much short volume. Then I have I'm using the triple leverage on this one because it seems to be a little bit more. What's the 3 day at? It seems to be a little bit more visible than the regular. See if I zoom out here, you could see how it slopes. If I do the other ones, it's not going to slope to that degree. Since it moves 3 times the amount, I guess the slope is going to be 3 times the amount. It's just triple leverage, right? With this one, there you go. The SPXL, right? The TQQQ. And this is short interest. And the UDOW. These are all triple leverage ETFs. So you can see the slope sharp. It's a sharper slope when it does move. And as of now, these two, and then which makes this one looks like the Dow and the Nasdaq are both having more short interest on it than the SPX or the SP 500. And another thing too, typically when you get these two indicators, this orange one and this oscillator with the purple and the black, or the purple and dark red, get them to cross, the market is now shifted and it's looking for a bottom, and it finds its bottom usually when they both exit out of the extreme zones here and here. After a whale pump would be more, or whale dump, excuse me, it would be more relevant for those two, especially during a crossover like right here. But then that would be at a topping zone. You don't want to do that. It'd be more wiser to buy it while they're in the extremes if you want a dollar cost average in on a asset. And then this one almost had it, but you can see how typically when this oscillator right here moves into the oversold zone, uh, the likelihood for the price to decline increases. Oversold zone, price decreased. Oversold zone, price decreased. Right? Oversold zone, price decreased. So it gives it the odds. It increases the odds for the likelihood to increase, but it doesn't guarantee anything. Right now, it's currently in that zone, and we can see a better, more clearly if we use this one. See, this is the 3 day though. Okay, let's turn the weekly. Okay, see, it's here. This one does look like it. When price does look like it wants to turn down, but it hasn't. And keeping a trend line on it, well, I don't know if it's going to be useful anymore. Keeps on going up too much, but they're both up at the same time, and that rarely happens. You so yeah, you can see there might be a bottom right here occurring at this top, at this peak. And if it does get that look, one down, small bump up, and then come down, right? So it's very interesting, worth keeping an eye on. But yeah, it's time for me to end this video. I'll see you guys next time.